but it doesn't stop at piggybacking. You got a whole contingent of traders who are trying to front-run ARK, as I mentioned earlier. Last week, we learned that Cathie Wood and her team are launching a new ETF focused on space exploration. In response, all the high-profile space stocks soared higher, presumably in the expectation that ARK's new ETF would be a buyer, and they can toss it to the ETF. Virgin Galactic, the extremely early-stage commercial space tourism play, saw its stock jump 20%. There were similar moves in Maxar Technologies, Viasat, Iridium, Orb.com, all because Cathie Wood's new fund might be interested in them. Maybe, but the darn fund doesn't even exist yet. So these trades feel like a recipe for disaster. All told, these 5 space stocks are up 29% on average year to date. That makes it tough for ARK to get a good entry point once this new ETF launches because everybody front-ran Cathie Wood. So now Wood and her team are coming under fire for all sorts of these graybeards they're after. You know, the people come on and they say that people are like frogs that boil because they're buying stocks, whatever. People get nervous when they see a fund with such incredible performance. Barron's piece yesterday made some good points about the law of large numbers. Can't manage $47 billion the same way you manage $3 billion. The skeptical Wall Street Journal article just last week, which compared ARK to one of the hottest mutual funds of the dot-com era, Janus. After racking up huge wins on stocks like Cisco and AOL, the Teslas in the 90s, the dot-com bubble burst and Janus's funds got obliterated. I don't know if it's the right comparison or not, but it's good to have historical and to have it in your mind. Well, I don't think ARK is the next Janus. That would be too harsh. I also wouldn't count on them to continue to deliver awe-inspiring returns year after year, especially after publishing what they're buying. Don't get me wrong. Cathie Wood is legitimately brilliant. But she and her team have to keep finding new winners, and it'll be a lot harder to find them and to buy those stocks at reasonable prices because there's so many copycats. And by the way, the people, like you look at Wall Street Bets or Robin, they keep taking and taking. They're not going to. They'll take it in front of for Palantir. They'll take it in front for GameStop. They're doing an AMC now. They just have a Bed Bath and Beyond. If you wanted to buy those stocks, forget it. They'll move them up too much. The biggest risk, though, I think, is the lack of diversification. These speculative growth stories tend to trade as a group. Right now, the market loves momentum, so they're doing great. But the next time momentum goes out of style, well, it could be look out below. Here's the bottom line. Cathie Wood and her team at ARK Invest have made some incredible calls, and my hat is off. My hat is tipping to them. They absolutely deserve all the praise they're getting. We are going to continue to follow her like a hawk. That said, when I see so many copycats trying to imitate the same manager and take stock ahead of her, it makes me a little nervous. So keep your eyes open. Wait for when we think enough is enough. But remember, it sure isn't yet.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.